Hey everybody, how is it going this Friday? Well, in this video I want to talk about the Chinese stocks because they have been getting beaten down pretty badly in the last several months or so, and I think some of them are starting to represent some pretty decent values. And then I want to get into some long-term charts and talk about the emerging markets, which also includes China, because I think they have a strong potential to outperform the US equities in the next market rally. Now, if you're new to my channel, I have been trading and investing for over 20 years, and in each video I will show you trades that I see setting up right now. So if that's something that interests you, please consider subscribing so you don't miss any future trading and investing ideas. And also, if you would like to support the channel and become part of our Patreon community and see what we are buying and selling in real time for a measly $10 a month, that link is in the description. All right, I want to start this video out with the Nasdaq Composite. I know this is about Chinese stocks and emerging markets, but I just want to start out with the Nasdaq Composite. And I don't know if you guys have been looking at this lately, but this is the weekly chart of the Nasdaq Composite. And every time I look at this chart, it kind of scares the living crap out of me. When I think about the stocks that I'm holding, I'm actually in more cash than I've been in a long time, but I still have plenty of money in the market. And every time I look at this, it just makes me really nervous. But this trajectory is starting to look just like it did back in the late 90s when I first started trading and investing. And man, that didn't work out so well for me back then. That was back in my early days of investing. And I always told myself if I saw that again, I would know exactly what to do. And I got to tell you, I don't know exactly what to do because the market just keeps going up and I don't want to miss out on it. I feel like I'm missing out on some of it because I'm in more cash, but I definitely don't want to get run over like I did back then and like a lot of my friends did. But actually, let's go back to that chart of the Nasdaq in the late 90s. Let me go back in time a little bit. I started in, I believe it was late 1998. And, a lot of people were just making tons of money. And it was, you looked on the news and it was like teenagers, walking down the street with a backpack, or just, super successful day traders. They were making it look easy, and it sucked a lot of people into the market, myself included. And I more than tripled my account in by the end of late 99, but I lost more than half of it by the time I actually gave up investing for a while. The market just kept going down. It was such a grueling bear market. But I actually started trading with 6 other friends, and I kid you not, every single one of them blew up their accounts completely. I wouldn't have believed it if I hadn't seen it with my own eyes, but their accounts actually went to 0 because I guess they just kept trading. They lose 20%, make another trade, and eventually the account was worth pretty much nothing. And I always couldn't understand that because I figured if you were holding some stock, your account would at least be worth something. But their account literally went down to pennies. But after I made quite a few poor trades in a row, and I gave back pretty much everything that I made, I took a breather from it and I decided to watch the markets. And I got to tell you, man, in the right around 2002 or so, in the beginning, I was thinking that maybe stocks were not going to go up ever again. If I would have known then what I know now, I would have certainly been buying the heck out of stocks back then. But let's go to the current day again and just take a look at that trajectory. And it's starting to look exactly the same. Now, in right around the bottom of the market in 02, 03, I remember emerging market, especially Chinese stocks, were outperforming. Chinese equities were considerably outperforming U.S. equities back then. And you can see this run up that they had in, off of the bottom to the financial crisis before it rolled over again. It was a decent rally, but it wasn't nothing like we're having right now. But let's go to the EEM to show you what I'm talking about. This is the iShares Emerging Markets Index Fund, and this one started trading in '03, right around the bottom of the market, but you can see the trajectory of this one. This thing just went straight up. You know, the Chinese stocks went into a bubble, and then they crashed. I think they might have topped out just before the financial crisis, but they were in a bubble of their own. But look at this chart ever since. I mean, this thing has just been in a long consolidation. I think the emerging markets are setting up to go higher, and they might have already broken out of this consolidation. Now, if the U.S. market rolls over, I would expect emerging markets to roll over as well. But when the market starts to bottom, I do think that I'm probably going to be buying more emerging market stocks and ETFs, because I do think the way that this thing is set up, they should outperform the U.S. equities in the next bull run. You know, who knows how that's going to play out, but I just wanted to put out this video and show you guys what I am seeing, so you guys could do a little bit more research, because I think we got tons of time, you know, and I'm still narrowing everything down. But another ETF they have is SPEM, and this is the Spider S&P Emerging Markets ETF, but you can see same exact story. So I'm going to get through these pretty quickly so I can get into some of those Chinese stocks. I don't want this to drag on too long. But same exact story on the SPEM. If we look at the Schwab product, which is the Schwab Emerging Markets ETF, same exact thing. Nice long consolidation. I already draw on this one. These consolidations have been going on for over 10 years in these. And as this consolidation continues to go sideways, companies in these emerging markets, their earnings continue to grow, so the multiples shrink. They're becoming a much better value. In fact, they are a much better value than most U.S. equities right now. Another one is the Vanguard product, which is VWO, the Vanguard Emerging Markets ETF. This one actually goes all the way back to 2005, so this one participated in the big run, then the collapse, and has been going sideways ever since. So as you can see, these have been in long consolidations, and they look like they are just starting to break out. But like I said, if the U.S. markets are topping out, I would expect these ones to roll over as well. I mean, who knows what's going to happen, but that's just what I would expect. But I would look to try to be buying some of these probably during the market pullback, more so than just completely loading up on U.S. equities. That's just what I'm thinking right now. That could change in the future, but it's just looking like that's the way the next market rallies are setting up. If we look at the FXI, which is the China 25 Index Fund, this one shows, I've already drawn the consolidation on this one, but this one shows the massive run in the Chinese stocks during right before the financial crisis. I mean, just a parabolic move like we are seeing in the Nasdaq Composite right before that rollover. And, this one just shows me even clearer that the Chinese stocks are setting up to run. And the most interesting one is the Japanese ETF, the EWJ. Anytime you hear anybody talking about the Japanese, actually, let's go to the monthly chart on this one, then we'll jump into those other stocks. But if you look at the monthly chart of the EWJ, when people talk about the Japanese stock market, they say it's pretty much gone nowhere since the 90s, and you can see this in the chart. And I don't think anybody is talking about Japan potentially breaking out and being one of the markets that outperform. I'm not saying that Japan is going to, but this chart is looking pretty constructive. I don't think anybody's going to see Japan coming if they go on a big market run. But this one looks like it is starting to potentially break out as well. Just a huge rounding bottom on the monthly chart for the EWJ. All right, let's get into some of the Chinese stock charts. Let's start with Alibaba. Alibaba is one of my favorites. I mean, this one is definitely under pressure. This is the monthly chart. Let me go back to the daily chart for these individual stocks. You can see Alibaba has been under pressure ever since, let's call it late October, when it was up over $300 a share, and now it has pulled back to around $200. It's been about a 37% pullback in Alibaba, while the earnings continue to go up. So the multiple is shrinking on Alibaba, but I think because of all the news going on with these Chinese stocks, I wouldn't be a bit surprised if there is more pressure on these stocks, and I think this is a great time to be accumulating some of the better names. Now, if we do get a big market rollover, these stocks are probably going to roll over as well, so you don't want to just load the boat right now, but this is not a bad time to be dipping your toe in the water. And I actually bought some Alibaba in one of my accounts yesterday at $200 a share. So I've started my regular position in Alibaba. I have it in my M1 Finance account, but that's a small position. I actually started buying some of this one in my IRA, and if it goes lower, I will continue to buy more. Another stock that I've been watching for a while that I don't own is Tencent. I've been wanting to get into this one, and it's finally starting to really roll over. But look at the trajectory on this rollover. I mean, this will be great for a short-term trade. As you can see, it's already bouncing up 4.5% today. But you can see when it has these sharp rollovers, it usually has a subsequent sharp bounce up as well. So I think I wouldn't be surprised if Tencent bounces back up into the mid 70s or so. So I mean that's a pretty decent trade right there. But I'm looking to buy some Tencent for the long term. And if this thing rolls over and gets into the 50s, I'm definitely going to start buying some Tencent. Another one that I really like is BZUN, which is BZUN Incorporated. A lot of people are calling this the Shopify of China. They're not quite the Shopify of China. I would say they're more of a combination of Shopify and maybe Amazon. It's a pretty unique business model, but they are continuing to grow. And as we can see, BZUN has just been going sideways since 2018. Actually, we could probably mid 2017. I mean, honestly, they're right in that same range right there. So while earnings are continuing to go up, the stock price has been going nowhere since mid 2017 or so. So the multiple has been contracting on BZUN. If this one gets into the mid 20s, I definitely want to start buying some. Actually, the more I look into this one, the more I like it. I think I might want to start buying some of this even before that. But if this thing gets into the mid 20s and certainly the low 20s, that's definitely one that I want to buy. Another one is JD.com. JD.com has been pulling back. Not a huge pullback in JD.com. Actually, it looks like it might be trying to carve out a little bit of a rounded bottom right now. We'll see how it plays out, but JD.com is on sale. This one has fallen about 38% peak to trough from a few weeks ago. So, I mean, over a 30% pullback right now in JD.com. Another one is Pinduoduo. Pinduoduo has fallen just a little bit harder. This thing has fallen from over 200 a share to yesterday down to around 100. So, a 51% haircut on Pinduoduo. So, I mean, these Chinese stocks have been under pressure. You know, they're getting pressure from their own governments. They have pressure from ours, you know, these delisting threats, and this is when you want to accumulate good companies. I don't think that they're going to delist any of these Chinese companies. I could be wrong. That's, of course, a big risk, but I do think China doesn't want to be taken out of our exchanges, off our markets. So I think that they're going to eventually comply with all of our demands, hopefully. So because I do have some of these stocks, I don't want to get crushed on them. But another one is NetEase. If we look at NetEase.com, we can see this one has been one of the stronger ones. This one hasn't pulled back a whole lot and just continues to go sideways. It's only pulled back right around 22-23% peak to trough from a few weeks ago. So NetEase is still holding up well. Another one is Joy Y Incorporated. Joy Y Incorporated has been absolutely crushed. They are in the internet content and information sector, but we can see this one topped out almost $150 a share and is down to right around $60 a share right now. So it's down about 60%. So pretty good buying opportunity in YY if you like that company. I don't know a whole lot about these Chinese companies. I'm still looking into them. I think that I still have time to accumulate these for sure. So I've been looking into them pretty closer than I would a U.S. company, because these Chinese companies have been known to make believe. So you got to look in. You got to put in just a little bit more work. Another one is VipShop Holdings. This one actually got crushed with Discovery and Viacom in that hedge fund debacle just a few months ago. But we can see this one has been crushed by about 60%. So, I mean, just another stock that has been absolutely destroyed. But right now, I want to get into the ones that I find the most intriguing, and they are the for-profit education Chinese stocks. These things have gotten. It's hard to say. I'm so excited about these. Have gotten absolutely destroyed, and I think that online education is not going anywhere. And if we get another another shutdown in these economies, I mean, these should do well. But I do think that the sector is going to continue to grow. The first one I want to show you is EDU. EDU is New Orient EDU and Tech Corporation. We can see this one has fallen off a cliff. This one was trading at about $20 a share and is now down to $6.50. It is down almost 70%. So just a huge down move in EDU, and they all look like this, guys. Next one is TAL. You can see TAL has fallen from $90 a share down to $20. That's a 78% decline. You can't tell me that these things aren't due for a bounce. These things are trading like they could be going out of business, which you never know. They could be, so you got to look into them. You got to be aware of that risk. Or they're trading like maybe they're committing fraud. Who knows? That could be possible with some of these Chinese stocks as well. But TAL, I mean, it just looks like a fantastic buying opportunity. This company has been around since, let me see, let's go to the weekly chart. They have been around since 2010, so I wouldn't imagine they'd be going out of business, but look how sharp this decline is. I mean, this thing is just itching for a bounce. The sharp decline that I had in 2018 pulled back a little over 50%, and look at the move that it had after that. If this company does not go out of business, they should be due for a bounce anytime now. Another one that I want to show you is YQ. You can see YQ has been destroyed. Let's go back to the daily chart on this one. Hasn't been traded too long. This one topped out right around $23 a share, and now it's down to $2.60. So an 88% decline in YQ. This one is called 17 Education and Technology Group. So, man, just a huge decline in YQ as well. And the last one I want to show you is GoTo, G-O-T-U, which is Gaotu Tech EDU Incorporated. And this one has been traded for quite a while, I believe, as well. Well, I guess just since mid-2019. But look at the collapse in GoTo. Actually, let me go back to the daily chart. I mean, this thing started right around $10 a share, had a move all the way up to $143 a share, and then it pulled back 66% down to $45 a share with another huge move back up to $150, another 214% move. And now we have a decline all the way down 90%, all the way down to right around $13 a share. So, I mean, people thought very highly of these stocks at one point. You can see that some of these stocks had huge runs and had huge stock prices at one point in time. But I haven't looked into all of these enough. That's going to take me a long time. But I just wanted to show you guys these charts because I thought they looked really interesting. And I do have that opinion that if we do get another collapse in the U.S. markets, I think during the next market rally that the emerging markets are going to outperform the U.S. equities. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.